In today's video, we'll be going over some of your tax vehicles as a business owner. Should you be an LLC? Should you be an S Corp? Or maybe a C Corp? Well, Jared Foos, our resident tax advisor, is going to be going over some of the best options for you and why those might be your best options. Of course, nothing is set in stone and everything is situational dependent, but this will give you a better idea on what that looks like and why things are used. So Jared, can you go into some of the different options that the travel nurses and travel medical professionals have?
Yeah, absolutely. And one thing I always love talking about, and it's not just the medical professionals, business owners alike. I get business professionals that come in all the time and I say, hey, how are you taxed? And they say, I'm an LLC. I'm gonna let you on a secret, I'm gonna let you open the curtain, see that the wizard's not there. Basically, the LLC, from my perspective, from a tax perspective, means nothing. An LLC is a state thing, okay? That really dips into the waters of, it's a liability, it's a state law type deal. An LLC, I want you to think about it from a tax perspective as a sandwich, okay? That LLC can be a roast beef sandwich, it could be a turkey sandwich, it could be a ham sandwich, it could be all kinds of different sandwiches, all right? For when clients come in and say, I'm an LLC, it still doesn't mean anything to me. An LLC is a stepping stone from an organizational standpoint. It can be a Schedule C, which is a sole proprietor. Because the IRS, and I'm gonna let you know another secret, the IRS does not recognize the LLC as anything. An LLC can be an S Corp. You can be an LLC at the state level and then elect to become an S Corp. You can elect to become a C Corp. If you have multiple people in the business and multi-member LLC, you can be a partnership. An LLC can be a 990. It could be nonprofit. Sorry, I didn't recognize that you probably don't know what a 990 is. It could be a nonprofit. It could be lots of stuff. The big thing with a sole proprietor, which is a Schedule C on your personal tax return, you report all of your income, all your expenses on what's called a Schedule C on your personal 1040. Generally, depending on income levels, you pay traditional tax. It can be anywhere from 10% all the way up to the highest, which is in the 20s or 30s. And then you're also going to pay what's called self-employment tax, which is 15.3. So I would say my average Schedule C taxpayer probably spends in tax on that income anywhere from 27.3 to 29.3%. Whereas if you're a single member LLC and you get taxed as an S Corp, which has some better bells and whistles tax advantage wise, but it has a lot more hoops. You eliminate the self-employment tax completely and only get taxed on a business perspective on your traditional tax. So C Corps are a little bit different. C Corps are going to be taxed at its own entity. It files its own tax return. It pays its own tax. Right now, that's 21%. So if you're going to be entertaining these three options, it's going to depend on what your income level is going to be. It's going to depend on different things. But I think the number one thing that's beyond tax is, are you prepared to understand the tax law of what hoops you have to jump through? Are you prepared to have the organizational piece of your business, meaning you're going to have good records, you're going to be able to do payroll? Those are all going to be factors on what to choose. And is it worth paying somebody to manage all those for you and kind of tell you what to do? I'll say that the last thing I want to say is basically a lot of times our clients who meet the needs of an S Corp or can take advantage of these things, personally, I tell them, if you give me the keys to the car, you just go make money and not think about any of this stuff. I'll keep you compliant and you can make as much money as possible. That's all you got to worry about. I'll take care of everything else. But some people, depends on what you are, what you want, and things like that. So.
Well, and I know that some of those terms are normally associated with like large entities and large companies like banks and financial institutions. But what everybody needs to remember is that a business owner is, at its, I guess, smallest form, is just a 1099. So if you are a 1099 employee, you're a business owner, and therefore you can use the majority of these tax vehicles that we're discussing. So
absolutely. S Corp does not mean you're a Fortune 500 company, or C Corp does not mean you're a Fortune 500 company. I've got farms that are both. So don't try to put it in a box that's like, oh, I can't become this, or find a tax professional that can help you, guide you through the process of that.
I think that that's a common stumbling block, especially when people just aren't really aware of it. They haven't even heard what an S Corp is. They've only heard C Corps, and that's only because it's like the big Fortune 500s that run ads and stuff like that. So
Yep.
it's something good to get educated on. And if you want to further your education, use the link below in the description. Get a hold of us and we'll reach out and see how we can help you further your education with the S Corps and C Corps. Just weigh all your options based on your specific situation. As always, we come to you for personal health solutions. So come to us for personal wealth solutions.